I think there's also a lot of people that don't, never really thought about this, or are really not prepared or completely unaware of what central banks and governments are doing with the financial systems.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. As we are getting towards the end of the year, and certainly a fascinating year it's been for gold and silver, the Fed playing the role of Santa Claus. Well, unfortunately, maybe not with people's lives, but making it more and more obvious of why people have been talking about gold and silver for such a long time. So fortunately, to discuss that and some other interesting things happening in the financial world, Marco Roque of Cassiar Gold joining me again. Second appearance on the show. So Marco, pleasure to have you back on here. How's everything going with you today?
Hi, Chris. Everything is great. Thank you for having me here again.
Well, it's nice to have you on here, and I know you're calling in from Portugal today. Perhaps before we dig into the gold market, just what is life like there today? We're fortunate to speak with people around the world. What's it looking like there?
Yeah, it's with the virus is a little bit like the rest of Europe. You have the virus numbers increasing, governments thinking about more restrictions yet again. Just try to stay away from harm's way, and keep the number of people you see to a bare minimum.
Yeah, I hear you, and certainly sending warm wishes to you and everybody out there in Portugal today. I'm sure we have some viewers there. Fortunately, because gold is such a global topic, um, I know Ben Bernanke doesn't understand it or have any friends who do either, but I think there's a lot of people around the world. There was some news, Uzbekistan, I believe, their central bank looking towards gold. And we've seen the price over 2,000 at 1830, down a little bit today. Quite interesting volatility, a little hump there. But what are you seeing with what's going on in the world and what we've seen this year? What are you seeing in the gold price these days?
I think there's a lot of people that see gold and silver in different ways. For me, it's really a protection against currency debasement and devaluation, more than an edge against volatility or even inflation. So yeah, so in that sense, I think this is a very attractive opportunity and a very attractive timing in the gold and silver space, because you saw central banks doing unprecedented printing in quantitative easing, and it's just mind blowing. The amount of increases, the percentage increases in the size of their balance sheets, and I think gold and silver prices have moved a little bit compared to a year ago, but not nearly as much as the size of those balance sheets. So I do think it's an attractive opportunity right now, and yeah, I think it's a place that people should be looking a lot more closely.
Yeah, I think so. I mean, that's why I left Wall Street to focus on this, because I thought it was that important. You mentioned the Fed, and obviously the other balance sheets. Gee, maybe I'll pull up the Japanese balance sheet. I mean, it's stunning when you think about how long quantitative easing has been going on there. And here, first 95 years of its existence, 900 billion. Then, you see again, perhaps something I'd be curious to get your take on. We saw here, this was 2018 when the Fed gave the appearance that they were going to raise rates. For 10 years, got it as high as a whopping 2.5%, and the entire stock market cratered, which is why I think good luck ever trying to undo this. What would you say about that, Marco?
I think it's the central banks put themselves between a rock and a really hard place, because if they try to do that, and especially in the last 12 months, governments have went to unprecedented spending, um, and I think their finances are becoming quite unsustainable, and it's looking pretty scary out there. And this is not just the United States. This is most developed countries and developing countries around the world. Yeah, so it's really it's really worrying to see how things are going to progress from here.
Well, Marco, you mentioned some of the amounts of the debt loads. Here we have the U.S. debt clock.
Yeah.
And as you see, well, so we're at 27 trillion, 435 billion, 14 million. And it looks like I've been accused of having long sentences from time to time. Looks like by the time I finish this paragraph, we might be up to 15 million on that one if I extend it a little longer. Uh, so, although what I find interesting, I mean, I wish we could have like, oh, if we could have had it during the debate. Imagine if we could have just pulled this website up and questioned both candidates. I don't remember hearing anyone talk about it. I think they ignore it because they know they can't do anything. It's mathematically impossible. Although, that aside, here down, if you can see my mouse, I'm going over to the dollars to gold ratio now. And if you look at the top middle, you'll see the definition. The year-over-year increase in the U.S. M2 money supply divided by the yearly world production of gold. So I interpret that basically as a measure of how many dollars are coming out this year, how much gold is coming out this year. And we see, just looking at the math, not saying this is where the price is going tomorrow, but just to put in context for people, what the numbers indicate is that you see $33,890 per ounce.
I'll take that.
What maybe we could do a series of shows of what some of the gold mining stocks, what their margins would look like with $33,890 per ounce gold, which, again, to be clear, I'm not saying that that's where it's going, but I think people get that there's money printing. They often miss the extent. And as someone who is out, I mean, you're out looking for gold, you have projects going on. What would you say about that number?
I mean, I personally believe it's definitely going in that direction. How fast is the question? I think there's also a lot of people that don't, never really thought about this, or, are really not prepared or completely unaware of what central banks and governments are doing with the financial system. So I think if we get a severe crisis, which we might, and the erosion in the confidence of the system really accelerates, these numbers, start becoming not that insane, and it's again, this is really worrying, and you see at the speed at which this clock is going up. Trump, when he came in, had a lot of things to say about the debt, but once he took office, he quietly pivoted away, and it did, to be honest, he didn't do a much better job on that front. Although to be fair, the last year was a pretty rough year for him as a president, with a challenge that no one really ever had to face. But this is the reality, and these are the numbers, and I think this is going to be positive for gold. The question is how fast are we going to see that change?
Yeah, and to add to what you're saying there, this number here, this 27 trillion, independent of parties, they've both done their fair share of ramping that number up. So we've seen, it doesn't matter which party is in there, that number keeps getting bigger. And it's not like I'm rooting for it to get bigger, but I see the direction that it's heading. We've seen it heading in this direction for 230 years. So, in that context, I think people are turning to gold. Hey, maybe we'd love a world with perfect government, but given the world we live in, it makes sense. And I'm curious, the investors you talk to and deal with every day, what are you hearing from them in terms of why they're turning to gold?
Yeah, well, I think it's because the reasons we've just spoke. It's their confidence in fiat currencies. It's eroding, and you don't really have that many options. You have gold, you have silver, and Bitcoin is also out there, getting some attention. I do have my questions on Bitcoin, and but I prefer to touch it and feel it, and that's why I prefer gold and silver.
Yeah, and I think there's a lot of people that fall into that camp. And for people who are wondering, I don't know, maybe gold they hear is risky, silver is risky. Yet, I don't know. When you look at some of the alternatives, uh, this headline made me giggle. Treasury yields jump amid vaccine rollout and stimulus hope. You can see it's up 0.4 of a basis point to a whopping almost 90 basis points when I feel like I remember the Fed a couple months ago, they were saying 2% inflation isn't enough. They're going to juice it higher. I mean, for people that aren't trying to be a hedge fund genius and just say, I've saved money, I've gone out, I've worked, I've built a business, I want to take care of my family and keep what I have and invest it wisely. And then you tell them this 0.9% treasury yield in a 2% inflation mandated world is the safe haven. I mean, like, what are they supposed to say to that?
Yeah, I guess they're in that scenario they're guaranteed to lose money in real terms. That's what the Fed is telling them.
Yeah.
I don't think that's a very attractive value proposition, to be honest.
Marco, are you going to be trading your gold? Perhaps maybe you can get some negative yielding German debt here,
For sure not.
or the Japanese and Japan, where you had Shinzo Abe basically run on a hyperinflation campaign. Then, I mean, we'll take a look. What do people say when they look at the stock market? That again, despite COVID, now that previous headline said stimulus hopes. So is the stock market? I'm confused. Is it weak or is it strong? I thought we need to print a lot of money because it's weak, yet it's at all-time highs. Is that the definition of a bubble, or what? What would you make of that?
Yeah, I think it's expensive in any measure. I think it's particularly expensive when you take into consideration the ravaging that the real economy has suffered over the last 12 months. It's a little bit sad, to be honest. Um, and actually, with the exception of a few big tech companies, there's a lot of the real economy is really struggling, and it's just I think this is a consequence of all this money printing. It's just it's a self it's a bubble that is also being created by central banks, because people, all this money is being created. It needs to go somewhere, and with so much liquidity, it's going not necessarily to the right places all of the time. And I think what you're seeing in the stock market is also a consequence of that.
Marco, I completely agree. And since you make a lot more sense than anyone I ever saw on CNBC, worked with on Wall Street, well, I don't know. I mean, it's not even fair to like lump the Fed into this category, because then you're kind of just like, beating up on someone. But do you think there's any connection between, now here's the peak of the bubble before the housing market collapses. You see the stock market was half, not even half of what it is. Let's call it 14,000, goes down here. And then here, 12, 13 years later, it's more than doubled. And it was so prosperous that it was never time to raise interest rates or pay off any of the debt. Is there any possible connection between that and this by the Fed's balance sheet?
I think so. I think, yeah. it's that's where a lot of the money is going.
Yeah, you see it going into real estate. I think I calculated close to a triple in the last 25 years. And it's in either case some measure well in excess of the 1 to 2% they claim. So that's my guess of why people are going to gold. And I know that you are running Cassiar Gold, which is one of the companies that people are turning to. You guys had some drill results out, and we've talked a little bit about the company before, but I was wondering if you could give us an update of things that are going on and how it's looking, and if people are trying to get leverage on if they believe a rise in the gold price or even just staying at these levels is in our future. Can you share what you guys have been up to?
Absolutely. Yeah, we had a really busy year. We had a really successful drill program. We've come up with really exciting and very encouraging results, really positive all around at our bulk tonnage targets. So we are, increasing the confidence and the size of that million ounces as we speak. And also, after this successful drill campaign, which we've released results over the last few weeks, I think you shared one of them on your last program. Some really nice interceptions there. You can see there the 18 meters at 5.43 grams per ton gold, or 83 meters at 1.2 grams per ton. Really exciting results for bulk tonnage open pitable resource with almost no overburden. Just in a few months from now, we'll start drilling on a different area. We'll be a few kilometers south of this bulk tonnage open pitable resource, which is very high grade. This is 15 to 25 gram per ton, 2 to 3 meter thick veins. And there's a lot of excitement, and I can't wait to start drilling there and start getting some really high grade results to start building a high grade resource to add to our growing bulk tonnage resource.
Yeah, and Marco, perhaps I think a question that a lot of people run into. I mean, there's varying levels of skill, but even as someone that my background was on Wall Street, I found a lot of these mining stock deals. It just takes a while to learn the language. Can you put into context when someone sees results like this, how it compares to similar projects, or just, when people are looking at a lot of different companies, and maybe some tips on how to get started so they can really begin to understand what they're seeing here and what to take away from that?
Yeah, for sure. I think the easy place for people to start is companies that have actually a resource, so a 43101 certified resource, like we do, and typically there's two main types of projects on the gold space. You can have an open pitable project, in which case usually the costs are lower, so the required grade, which is the critical point, is usually lower. So you on average you can start to make money at 0.5 grams per ton. This is a rough estimate. There's a lot of other factors, but that's probably the first one you want to look. And as you can see, our grade is actually quite well above that kind of break even. If you're looking at a much higher gold price, then grades start becoming less and less relevant.
Right.
And then, if you go for underground type mine, then you require higher grades, and then you'll like to see 2, 3, 4, 5 grams, and the kind of material that we have on our high grade, which would be more very likely an underground scenario. We are talking about 15 to 25 gram per ton material. So that's really the key thing you want to look at. The grade is king, and you also want to start with a resource, because then you have some identified resources on the ground that can start thinking about putting a number into the contained metal value, and start thinking about what would be the cost to extract that gold out of the ground.
Well, I appreciate that. And I think people will find that helpful. And for anyone who may be hearing the term of 43101 for the first time, can you explain what that is and where they can generally find that on a company they're looking at?
Yeah, for sure. I mean, like a company that will have that will definitely have it very, well, well marketed. So 43101 is the Canadian standard for resource, to define a resource. So you want to go with that kind of standard because it's a well-defined, internationally accepted standard. You also have JORC, which JORC type report, which is the Australian, the Australian type. So yeah, so that's really kind of the gold standard for the industry, the 43101 or the JORC. And the 43101 is actually superior in many ways, and that really what does for investors is it gives a degree of confidence into the gold that you have on the ground, which is the stuff you want to own.
Yep. Well, I appreciate that. Again, I think there's a lot of new people coming into metals, so a lot of value in helping to define these terms. So thank you again for sharing that. And perhaps in wrapping up, for people that are seeing these numbers, for people that are seeing this growth in the balance sheet, they're looking to gold, they're looking to get leverage. Can you just let folks know where they can stay posted? They do want to find out if they have questions about the project, what you guys are doing, what you're focusing on, how they can find you, and what the website address is.
Yeah, absolutely. They can find us on our website at www.cassiargold.com. You can sign up on a page that you have there. You can sign up for the updates, so you can get all the updates as they come up. So then you can also follow us on social media, Twitter, LinkedIn, Instagram, Facebook. We also post our updates there too. And you can also reach out to me directly if you have any questions or like to know more about the company and our prospects. My email is marco@cassiargold.com. So, happy to answer any questions and get in touch with with folks that want to know more about what we have and what we're planning to do.
Well, I appreciate that, Marco. We'll have all of that in the description field below. It's been fun following what you guys have been doing. I think before we hit the record button, we were talking about how, right, the gold prices settled back in a little bit, and there's, some enthusiasm coming down. But it's nice when you get this chance, you can see our companies following through on what they're doing. Are they developing the business side that they have control over? So thank you for coming on again and sharing an update and giving us some insight into the gold market at this interesting time. And again, a happy and safe holiday to you and your family and everybody out there.
Thank you, Chris. Thank you for having me, and happy holidays to you and everyone listening.
Well, I thank you, my friend. And fortunately, last time Marco was on the show, he did give a nice profile interview of Cassiar Gold, which is coming your way now.